Good evening, everybody, and welcome to the session. So there is a chat window also enabled. So I would always encourage you to type whatever questions आपके पास आते हैं, and let's answer it one to one. Okay. So everybody ready? Did you attend the first webinar in the series? आज का जो webinar है, is the second webinar we are going to have. Fine. Okay. Before we start, today's strategy is about option strategy, which is what we call a wheel strategy. And a wheel strategy is for investors. And when we say investors, this is in terms of stocks which we are selecting, in terms of strategy which we are discussing. It's aimed to investors. Fine. So the strategy is let's explore, understand, and execute today. We'll learn all the aspects of the strategy, which is a wheel strategy. Before we go into the webinar, I'll read out the disclaimer part of it. The disclaimer is that this webinar on wheel strategy on 27th of January 2026 is for educational and information purpose only and does not constitute financial advice. Right? And it's private and confidential, and please do not circulate. So let's start. How many of you have heard about wheel strategy? Give me a yes or a no before I go into the working. कितने जन ने wheel strategy के बारे में सुना है? Okay, I'm getting no. Fine. No from all. Fine. See, when we come to option strategies, there are option strategies which are directional. There are option strategies which are non-directional. These comes under the trading category जिसको हम बोलते हैं traders के लिए, जो either who are trading these strategies in the weekly expiry, or those set of traders who are trading this strategy on a monthly expiry. Most of the strategies जो हम option में समझते, सीखते और apply करते वो trader strategy है. So what's difference in this session is this strategy is for investors. Okay. So how many of you are interested in learning a trading strategy, which is, sorry, an option strategy, which is for investors? Give me a yes or a no. Fantastic. No, I'm getting lots of yes. Great. So let's first have an overview of an option strategy. Option strategy hai kya? Option strategy mein, there are two parts to this strategy. This strategy is a combination of two, which I will explain in detail. The first part of the strategy hai is called selling cash secured puts, which means that you sell the put option, and if the put option expires in the money, you take the delivery of the stock. Is it clear, everybody? What is a cash secured puts? You sell cash secured puts. And the second part of this strategy is एक बार delivery आ जाती है stock की, fine. Then you want to generate an additional income from your holding, from your investments which you are holding. So then you do covered calls, what we call writing covered calls. So this is the second leg of this strategy or second part of the strategy जिसमें हम covered calls बेचते. So we will, and the third part, which is integral part of it, is whenever you are selling the calls or selling the puts, it's always OTM, out of the money. How many of you have a detailed understanding of OTM, out of the money? Give me either a yes or a no, friends. Yeah, I'm getting lots of yes, encouraging for me also to know that. Great. Now, as I mentioned, जैसे मैंने session start होने के पहले उसी समय कहा था ये investors के लिए strategy. So it's not a trading or a trader strategy. Fine. So with what mindset I need to approach this strategy? With what mindset I need to have the required capital? And what I am prepared in context of my returns when I apply the wheel strategy. Don't you think these three questions are coming to your mind? Yes or no, friends? Strategy में क्या करना है, कितना capital blocked है और कितना return expect कर सकते हैं. Fine. So now let's go next. A wheel option strategy we only do in those sort of stocks which we are willing to buy and hold it for the long term. So let's say I want to buy and hold an HDFC bank or a Nifty ETF and want to hold it for a long term. आप ये strategy उसी में apply कर रहे हो जो stock आपको लेना है, but current भाव पे नहीं लेना, एक नीचे के भाव पे लेना. So you don't want to buy that stock at the current price, but you want to buy the stock at a lower price. Is the first part clear, sir? Stock selection process in this strategy. Stock you are willing to own. आपको इसकी delivery लेनी है, but ये भाव पे नहीं, नीचे के भाव में. Give me a yes. Okay. Second is, when we do wheel strategy or when we are willing to hold stocks for a longer horizon, taking into consideration कि मैं ये holding में wheel strategy apply करूंगा, it has to be stocks which are steady in the price movements, which normally हम लोग बोलते fundamentally strong stocks. Let's say अगर आप long term price charts देखते Reliance का और HDFC बैंक का, they do come down occasionally on a medium term basis, but the longer trajectory is up. So let me now take you to our platform, which is Stocko InCred Money Trading View platform. So first, I will take you to a longer term time frame chart of HDFC Bank. ये HDFC बैंक का monthly chart है. See, short term, medium term में you are seeing some levels of decline. Or for example, Reliance. Right? अभी आप देख रहे हो Reliance का भाव नीचे आ रहा है. It is coming down. Right? Now, if I see Reliance on a higher, longer term time frame, the trajectory of Reliance or the price movement of Reliance, don't you think it is going up on a longer term time frame? Yes or no? Yeah, I'll wait either for yes or a no. But as a investors के लिए M2M losses नहीं रहते. For investors, you have a drawdown. के बीच में एक momentary phase आता है where prices are going down. I repeat, in between, you get momentary phases where prices are going down. But you want to hold Reliance, let's say, for next 2 years, 5 years, or even 10 years for capital appreciation. Am I right, friends? Or I take Nifty 50. I'll now go to the price chart of Nifty. This is price chart of Nifty on our Stocko InCred Money Trading View platform. It's a powerful platform. It is coming down. अभी हम देख रहे हैं market में drawdown चल रहा है. But if you see the longer term trajectory of Nifty 50 over here, what it is showing, up, down, or sideways? I repeat, if I see the longer term from the COVID low, what it is showing? Up, down, or sideways, friends? Yeah, hello traders and investors out there. क्या दिखा रहा? Up or down? If it's up, give me a thumbs up. It's showing up. Fine. Again, one of the participants gave me thumbs down. Again, it's not for trading. Last 3 दिन में क्या हो रहा वो नहीं देखना. Last 10 दिन में क्या हो रहा वो नहीं देखना. Last 5 से 10 साल में क्या हो रहा वो देखना. What is there in terms of price movements? Is it in a long-term uptrend? Now is it clear? The gentleman who gave me thumbs down? Yes, right. So now let me go back. So where we are applying this strategy is stocks which are highly liquid in options and stocks with low volatility. If you see price charts of, I have taken for consideration HDFC Bank. This is a monthly performance of HDFC Bank in 2025. अगर आप देखते हो यहाँ पे तो HDFC Bank on a higher side has moved 5%, which is in March 2025, and on the lower side it has moved -5%, which is in August 2025. So are you getting a feel that HDFC Bank is a steady stock? It can ज़्यादा move कर सकता, but this we take closing to closing. November, December, January, closing to closing. So we are seeing on a historical basis, the movement of price on a closing basis is 5%. This is what we mean by stocks which have a volatility which is not extremely high, like stocks of Dixon Technologies or something which goes down 20-30 points. Have you now understood the stock selection process, friends? Give me either a yes or a no. Stocks you're willing to own. Yes, you want to buy HDFC Bank. Fundamentally strong stocks, high liquid in options, and stocks with low volatility. Fine. So these are the set of stocks. ये सारे stocks है जिसमें हम wheel strategy apply करेंगे. Another stock selection process is, I have taken the example of returns of Nifty, in which if you see Nifty over the last 10 years, the returns are more or less in higher side of 10%, which is a decent compounding. Plus, this strategy will always give me certain additional return to add to my overall returns. Fine. So it's a capital appreciation plus the return by trading my option strategies. Okay. So the disclaimer is stock prices and strike used for illustration purpose only and should not be considered as a recommendation. So whatever we are doing is for educational purpose. What? See, the word wheel, what does it mean? It's continuously moving in a clockwise direction. Fine. Am I right? So the wheel strategy is a multi-step repetitive process. Step one, you don't hold the stock. You are holding cash. Let's say you want to buy a stock. It could be either a Reliance or a HDFC Bank. Okay. So the first step comes from you holding the cash and or the funds, and you are willing to buy the stock at your price, which is lower from the current price. So the first step is sell out of the money put options. Right? Now, if you are selling out of the money put options, two things can happen. On the day of expiry, भाव आपने जो strike price का put बेचा था उसके either उसके नीचे close होगा, am I right, or above that. If it closes below that, you have to take the delivery of the shares. If it closes above that, the entire premium is all yours. Am I right? Give me a yes, friends, if you have got it, all the traders out there. Now, the second step is after selling the puts. I repeat, after selling the puts, if the puts are exercised, which means that delivery aa gayi, the strike price which you have sold, it closed below that. So you have to take the delivery of the shares, right? The cash in your account and it is used to buy the shares. If exercise, go to step 3. If not exercise, return to step 1. So let's now go and see practically in the live market what the current scene is, how to apply step 1 and step 2 before going to step 3. So for that, one of the stock which I have selected, let's say from the long term perspective, मुझे Reliance में invest करना, I want to hold for a longer period of time. Is it fine, or we'll do it in Nifty also? Is it fine if I take Reliance? Everybody, either a yes or a no, fine. So now I'm going to the price chart of Reliance, and the platform which I'm using is Stocko InCred Money Trading View platform. So I've added Reliance to save time. This is Reliance. Now I go to Reliance, let's say on a weekly or a monthly time frame charts, right? Reliance is falling. I want to do the wheel strategy. So now I decide that Reliance is currently quoting at 1380. Reliance का भाव अभी 1380 रुपये चल रहा है. I don't want to buy Reliance. मुझे ये भाव पे Reliance नहीं खरीदना है. I want to buy Reliance at a lower price when Reliance comes at this price point. And that price point for Reliance is at what price? So I want to buy Reliance at 1290. 100 रुपया नीचे. Everybody, if you have understood, give me a yes. This is the first part of my strategy. अभी 1380 का भाव चल रहा है. मुझे Reliance 1290 पे लेना है. So as an investor, you have decided that I will enter Reliance at 1290. This is the first leg of the strategy. Fix the price at which you want to enter. Is it okay, everybody? Give me a yes if you have understood the first step. Yes. So if you have decided you will buy at 1290, which means the first part of it is you sell 1290 puts, which is OTM. Getting it, everybody? Now, two things can happen. अगर मैंने 1290 का पुट बेचा, So let me now go to our another powerful platform of Stocko InCred Money, which is Insta Options. I can go to the option chain and see the premium of 1290 strike price in Reliance. Okay. So I go to the option data, I go to the option chain and I look for Reliance. So Reliance is 1390. Now I want to sell the put option of Reliance at 1290. So I'll go to the 1290 put, and today is the expiry. I'm going for the February expiry. Okay. So this is the option chain in Stocko InCred Money Insta Option platform. So I've selected 1290, and what is the price? 9 rupees. So if I have sold a put option of Reliance where I want to buy Reliance at 1290 at 9 rupees. So if I'm selling the premium, I will receive the premium. Am I right or wrong? Yes, no friends, I'll receive the premium. And what is the lot size of Reliance? If I look at buy, lot size is 500. Okay. So the put side. So I'm selling Reliance at 9 rupees and the lot size is 500. Okay. So the first leg of strategy में मैं क्या कर रहा हूं? Again I go back to my price charts. Which is I go to Reliance, okay, in which I have sold Reliance at 9 rupees. I'll just take you to the price chart over here. Done. I'll go to the monthly chart. So I will get a credit of 9 rupees, right? Which strike price I have sold? 1290. At what price I have sold? 500 quantity multiplied by 9 rupees, which is the next month. So what is my credit comes here? Premium received 4,500 rupees. Everybody got this calculation clear of the first leg of the strategy from where we got 4,500 rupees? Yes, fantastic. No, all are saying yes. Now, two things can happen. Either Reliance crashes from here and price can go down all the way till here, but it closes above 1290. तो मैंने अगर 1290 का पुट बेचा है और एक्सपायरी के दिन मेरा स्ट्राइक प्राइस is OTM, which is 1290 close there, I receive the entire premium. Yes or no? Yes. So if that happens, I keep the premium. Again next month, again I sell either at the same price or let's say अभी मुझे थोड़ा नीचे लेना यहाँ पे, so I'll sell 1250 strike price. Got it? Everybody? So I keep on selling the put options at the price where I want to buy Reliance. If the put expires, if the closes on the expiry is above that, which means my strike price is OTM, I keep the entire money. That's the credit for me. Okay. Now, the second thing can happen and keep on repeating this. आप every month Reliance के puts बेचते जाओ जो भाव में आपको Reliance लेना. जब तक Reliance वहां पे close उसके नीचे close नहीं कर रहा, this entire premium is all yours. Now the second part of it. What if Reliance closes below 1290? Am I right or wrong? What happens if Reliance closes below 1290? Now the second option is if Reliance closes below 1290. Okay. So in that case, what happens? मैंने 1290 का put बेचा. Let me write the price. 1290 के नीचे का closing आ गया, which means it has been exercised. So I take delivery of Reliance. Is the first part of the strategy clear? I take the delivery of Reliance. Why? It has been exercised. Give me a yes. So now I go back to our presentation, which is step 1, sell out of the money put options, what we call cash secured puts. Why cash secured puts? Because मैं यहाँ पे अगर वो strike के नीचे, if Reliance closes, I'm going to take the delivery of the shares. If it doesn't close below that, you can keep the premium. Second, put exercise हो गया, which means Reliance went below that price. So you use your money or your funds to buy the delivery of Reliance, right? Now, and go to step 3. If not exercise, go to step 1. Till the put is your put strike price, spot is not closing below that, you are only in step 1, right? And once put closes below your strike price, that means abhi delivery aa gayi. Now you are holding Reliance, fine. Then you shift to step 3, which is write covered calls on the stocks and collect premium. Now you are holding the stock in your DP. That means your stock is in an investment state, right? And once you're holding the stocks, then sell the calls which are higher calls, which is OTM. Now in step 4, if the call option is exercised, which means if you have sold a call, then again go back to step 1. So which means, let me take you to the practical application part of it, fine? So यहाँ पे you have taken delivery of the shares, fine, at 1290. Now you are holding the delivery of the shares. Now step 3 is, once I have the delivery of the shares which I wanted to buy at particular price, let's say 1290. अभी आपको क्या करना है? You are holding the shares, sell the call options which are typically 5% above the current price. Let's say for example, मेरे पास Reliance की delivery है, मैंने 1380 का call बेच दिया, whatever is the premium, fine. So once I sell this at a particular premium, it is called a covered call. अगर Reliance 1380 के ऊपर बंद नहीं हुआ, then whatever premium I have sold is, that's my net credit. Am I right or wrong, friends? Everybody got this strategy clear? अभी DP में माल आ गया, I am an investor in this stock. I always wanted to own this stock, but current भाव पे नहीं, मैं 100 रुपया नीचे लूंगा मेरे support पे. And once delivery came in, then what I am doing is that now I am selling the stock at a higher call option, which are called OTM calls. Okay, and you keep on repeating. Let's say in February I sold 1380 calls. Reliance closed below 1380. The entire premium is mine. Next month, either it could be 1380 or you sell the call option of 1400. So once you have the stock in your DP or a delivery, the second part of the wheel strategy is keep selling call option, what we call covered calls. Why covered calls? You are holding stocks, आपके पास वो stock है, and you are selling the call options. Okay. So this is the second part of the strategy. Okay. Yes. So either you can do it in Nifty. This is just a Reliance or a HDFC Bank or a Nifty, right? Where you think that from an investment perspective, let's say I can buy I want to Nifty abhi niche ja rahi hai, I'll buy Nifty ETF. Okay. Why? Because I have seen over the last 10 to 15 years, the historical, it has shown a return somewhere above 10%. Now by doing a wheel strategy, I can add to that returns and make it higher than the absolute return of 10%. Got it, everybody? Yes. So now, so before start of the webinar, we said in the cash secured puts, we are selling OTM, deep OTM. So just to brush up, what is an OTM? OTM in call option is all the strike price which is above the current price, and put option, it is all the strike price which is below the current price. So everybody is clear about the OTM. Why? Because if the strike price which you have sold is on the day of expiry, if it is still the OTM, that means you keep all the premium, you receive the premium. Give me a yes, friends. All the investors and the traders out there? Yes. Now, let's say I've taken an example of HDFC Bank. We understood the broad working of the strategy. Now, cash secured puts. HDFC Bank is currently trading around 960. As an investor, my view is fine, markets are a bit down. It can further go down. The price point at which I want to enter HDFC Bank on a longer term horizon period is not around the current price, which is 916, but at a lower price, which I have figured out is around 880. So I want to buy it at 880. So now the first part of the strategy is sell puts, which is 880 strike price, the price at which you are willing to buy HDFC Bank and take delivery. Okay. Second is, two things can happen. Either HDFC Bank will close at or around 880, which means you have sold OTM puts. The OTM puts are still OTM, so you receive the entire premium. The second thing can happen is you have sold the 880 strike price. Let's say it closes at 870, 860 or 850, whichever price, right? Because it has closed below the price at which you sold the puts, which means it has expired as ITM, which means it has been exercised. So you take the delivery of the stocks and buy the stocks. Till it's not exercised, keep repeating, which means keep on selling the OTM puts. The day it exercise, you take the delivery of the shares and now the stock is in your DP. So cash secured puts is the first part of the strategy. If you have all understood, give me a yes. What is a cash secured puts? And you can keep on repeating till the delivery is not assigned to you. Right? Now, in this, the second part of the strategy is covered calls.
हितेश सर
एक बार आपके पास delivery of the shares आ गई, the shares are showing in your delivery the stocks, which means now you are an investor in the stock, which you have decided you'll buy at a lower levels, and that buy has been triggered. So now how to generate, apart from the capital appreciation in the stocks if it's going up from the option part of the markets. So आपको यहाँ पे क्या करना है? The second part of the wheel strategy is covered calls. Covered call means I will sell call option of the stock which I am holding, which could be typically is just a reference point 5% above the current price or 4% above the current price. Right? As long as the stock, or sorry, as long as it expires out of the money, I receive entire premium. Again, second month, I am holding the stocks. For example, let me take February. HDFC Bank is trading around 916. It has been exercised. It came in my DP. So I'll sell 950 call option of HDFC Bank. In the month of February, if HDFC Bank does not close above 950 on the day of expiry, I will receive the entire premium. Am I right, friends? Have you all understood? So I'm holding the stock plus I receive the premium. Now I go into March. HDFC Bank is flat or a shade higher. Again in March, I'll go and sell 960 call option of strike price call option of HDFC Bank. Right? If HDFC Bank in the March expiry अगर 960 के ऊपर बंद नहीं हो रहा है, so I will receive the entire premium. So I'm holding the stocks plus I receive the premium. That's covered call. Now comes April. In April also, let's say in March closing in HDFC Bank was close to 940. In March, I will sell 1050 strike price call option. In March also, it closes below the strike price which I have sold. So I keep the entire premium. So I'm holding the stock also. And since the strike price which I am selling is still OTM. It has not got triggered. So I keep the entire premium and keep on repeating it till it expires at OTM. So this is the second part. The first part is keep on selling the put till it expires OTM. The day it expires in the money, you take the delivery of the shares. Once the delivery comes, you start selling the call option every month, right? And you keep on doing this till the strike which you have sold is closing out of the money. The day it becomes in the money, then what do? You give the delivery of the shares. Everybody clear now? Either give me a yes or a no. You give the delivery of the shares, right? So a wheel strategy is a combination of cash secured puts, which means sell the OTM puts, keep on doing it month on month till they are not exercised, which means till the strikes which you have sold is not becoming in the money. The day it becomes in the money, you have to take the delivery of the shares. Once you get the delivery of the shares, then the next part of the wheel starts. You have the delivery of the shares which you wanted to buy at a lower price. It has got triggered. Now sell the call option of the delivery which you are holding in the options market. Keep on doing it month on month and month on month basis. Keep on repeating till your strike which you have sold closes at the money on the day of the expiry. You keep the entire premium, you receive the premium, it's a credit, fine. If prices closes above that, then what happens? You give the delivery of the shares. So once you have given the delivery of the shares, come back to cash secured puts, start selling puts every month, right? Again, a delivery get assigned, go back to covered calls, keep on selling the call options. So you keep, that's why it is called wheel, which means I'm not holding a particular cash. Always either I'm selling a cash secured puts, and if exercised, I'm selling covered calls. And if covered calls prices closes above, let's say it's an ITM, then again I go to cash secured puts. And I keep on repeating this. That is why it is called a wheel strategy. Everybody give me a yes. Any questions? Let me know so far. Yeah, I'm neither getting a yes or a no from anybody. Yes. So this strategy is for investors who want to buy stocks but not at the current price, at a lower price. And the stock which they are willing to buy is not for 1 day, 5 days, 10 days, 15 days, or 1 month. They want to buy that stock for the long term. And once the stock for the long term they have bought, then how to generate an additional income from the holding? Start selling call option of a higher strike price, what we call OTM, so which is called a covered calls, and keep on repeating this process. So in the conclusion part is that this strategy is suitable for investors and not for traders who seek a steady income from their portfolio, are comfortable with options trading. For that, you have the powerful tool which is Stocko InCred Money Insta Options is there. I will show you an example how to do it. Have a long-term outlook on a specific stocks. You're not looking, let's say, Nifty or a Reliance or a HDFC Bank that for the last 10 days is going down and another 10 दिन और हो सकता नीचे जाए. No, you have a long-term horizon. Fine. On a compounding basis or a year basis, these stocks are good. You only enter those specific stocks जहां पे आपका एक long-term horizon, आपका long-term view है stocks पे. And you want to actively manage your investments, which means you are holding stocks, and those set of stocks have options also in options market. So you do covered calls on those set of stocks. So want to actively manage their investments. Lower risk compared to other option strategies, because here neither your risk is unlimited. Why? Because you are taking the delivery of the shares, fine. When you are doing cash secured puts, if they get exercised, and when you are doing covered calls, if prices run away from the strike price which you have sold, you are giving the delivery of the shares, fine. So that's why we say it's lower risk compared to other option strategies and suitable for investors. Now, this is very important. Why we do this is potential to lower cost basis over time. Let's say Nifty, if I go back on the previous, this thing was giving me, let's say, a specific return, or a Reliance or an HDFC Bank, and I held that. Okay. So which means that I got the capital appreciation on the stock, plus I was selling the call options, which was also generating me additional income for me. So that way, let's say I made 0.5% this month. So which happens that my holding, the cost has decreased by 0.5% this month, and keep on doing it month on month basis till it's not exercised. So this way it has the potential to lower cost basis over a extended period of time, and every month certain amount of cost you will be able to lower on your investments, right? So anybody, any questions? Yeah, now I'm open to questions. Plus, I want to now go and show you this strategy on Nifty. See, Nifty is not in cash, it's in futures. So what I can do is I can use a Nifty, plus I can use the ETF of Nifty. Right? So you can do this on a Nifty ETF or any stocks which are steady in the move. Okay. I showed you the example of Reliance. I'll now go to Nifty. So I'll go to the Stocko trading view terminal, which is there in front of you. And now I go to the price charts of Nifty. So this is Nifty. I go to a longer term time frame because हम ये investment के लिए कर रहे हैं. अभी बाजार नीचे जा रहा, fine. Okay. Which means that if Nifty comes at this point, I want to be a buyer, which is at 24,527. Right. So which is 24,587. So I'll take 24,600 put. Now I'll keep on selling 24,600 put options till it is not exercised, which means till Nifty on a expiry day closing, it does not close below 24,600. If it happens, that means since it's a Nifty, you can't buy in cash, you buy the equivalent ETF. Okay. And keep on repeating that. And once it gets triggered, then you start selling higher calls. And don't stop the process. Either you are selling calls or you are selling puts. You always start with selling puts. For example, let's take other stocks. SBI, State Bank. Okay. This is State Bank of India. So previously, State Bank में एक decline आ रहा था. जब ये decline आ रहा था, let's say you had decided at this price you will buy State Bank when price was here. So this was month 1, month 2, month 3, month 4, month 5, month 6, month 7 and month 8. 8 महीने के बाद आपके भाव पे आया. Yes or no, friends? State Bank of India. Yes. So till 8th month, let's say you kept on selling 720 put option of SBI. Got it? So you kept the premium right from this month, from where you took that view that I'll only buy at that particular price points and not below that. So for full 6 to 7 months, if you kept on selling a 720 strike price of SBI, it got exercised only in February 2023. So the day it get exercised, why I'm saying exercise, it closed below that level. Okay. So now you have to take the delivery of State Bank. So this was, you were doing a cash secured puts in State Bank of India for a period of 7 months. Give me a yes, everybody, if you have got it clear. Yes. Now, अभी तो क्या delivery आ गई ना stock की. Now the SBI stock, because it went below that, you have got delivery of SBI. So now this part is over, which was a cash secured puts. Now you go into the covered calls part of it. Now SBI is going up, fine. At this price, your delivery got triggered. So now you are holding. So if you see SBI on a month-on-month basis, right? How much in a strong market it is closing? 3%, right? Or let's say you sold here State Bank 3, it is now 7%, right? Let's say after your delivery came, you kept on selling State Bank 5% higher. So which means that this is covered calls. You sold, your delivery got executed at 780. Let's say I'm selling the call option of 820. The trend is up, so I'm getting the capital appreciation in the stocks. Am I right or wrong, friends? भाव ऊपर जा रहा है, तो capital appreciation मिल रहा है कि नहीं मिल रहा है? Am I getting it or not? Yes. Plus, since I'm selling OTM calls, if price is not closing above that, in that expiry, I keep the entire premium because by selling the call options, I receive the premium. Okay. And I kept on repeating, assuming I was selling a premium which was, let's say, a 10% or higher, right? So I kept that entire premium this month. Again, SBI right now on the day of expiry is 8% up on a monthly basis. Let's say over here, had I sold, assuming it is closing here today, which is at one, has I sold 1050 call option, what would have happened today? Let's say market has closed right now. Was it exercised or not exercised? I repeat, was it exercised or not exercised? How many of you say it's exercise? Give me a yes. You sold a call और उसके ऊपर बंद हुआ. It is exercised. Fine. So once it got exercised, now what you have to do? The way you took delivery over here, you give the delivery. Fine. The covered call part is over. Now again, what do? You start selling the puts on a monthly expiry. Keep on doing this till again you don't get back your delivery. Everybody clear? That is what is called a wheel. So till here, from here, this price you wanted to buy here, so you kept on selling the put option of this strike price month on month basis. So for 6 to 7 months, the entire premium you received was your net credit, right? Once you got a delivery, you started selling call options. Now, let's say today it closed above this, which means the covered call prices have closed above this. Now give the delivery. Again, what you do, start selling put options. Getting? So again, you are starting that same wheel again and again, which is cash secured puts, covered calls. Now, since the delivery you have given now, because it has closed above the strike price which you have sold, again start doing cash secured puts, which is start selling the puts of the monthly expiry. So everybody clear about the wheel strategy? It's not for traders, I repeat, it's for investors who are looking for a steady return, want to generate a higher alpha on their, let's say, holding, which means you are getting capital appreciation, but by selling the options, you are receiving the premium, and if you and the premium and the options which you have sold expires OTM or out of the money, you keep the premium, keep on repeating the process, right? So that was the wheel strategy, which I go back. It's a combination of two strategy, which is cash secured puts and covered calls. We saw this how to do practically on Stocko InCred money Insta options. We saw the Stocko InCred money trading view also when we decided the price charts on a monthly basis. So it's a combination of two, which is cash secured puts and covered calls, which is a wheel strategy. Okay. So I'm now, friends, open to question and answers. If anybody has question and answers, they can let us know. Either you can put it to the admin at Deepak ji, or you can type it in the chat window. But questions need to be asked for better understanding and the clarity. So how many of you attended the previous webinar and are attending today? Give me a yes or a thumbs up. 1, 2, 3, 4, 5, 6, 7, 8. That's great to know. It's encouraging. See, these webinars are part of the education series. Fine. Given the market conditions, given the options market. So let's learn new strategies for traders, for investors, how to apply it in the real market. It's not just one webinar today, it's a series of webinars. So it's now on your side to make sure you attend all the webinars on a regular basis, ask question and answers, clear your doubts. Yes, Deepak ji, I am open to any questions today.
Sir, can you listen
Anybody
me?
has any questions, please let me know.
Yeah, can you listen me, sir?
Yes.
Hitesh, sir?
Hello?
Can you listen me, sir?
Yeah.
Sir,
Yeah.
can you listen me?
Yeah, it's loud and clear, sir. Am I audible?
Yes, perfectly, sir. So,
Okay.
yeah, we have a lot of questions, sir. Can we start?
Yeah, go ahead. I'll take all the questions.
Yeah, the question is from Mr. Ramarao Dumpa, and he's asking to repeat the strategy once more. So, would you like to do that right now, or we'll do that in the later part of the Q&A?
Oh, see, Mr. Rao, the strategy is very simple, sir. The stock which you want to buy at a particular price point, sell the put option of that. What we call is a cash secured puts. Once prices close below that, you'll have to take the delivery of the shares, Mr. Rao. Once you have the delivery of the shares, go to the next part of the wheel strategy, which is sell covered calls, which means sell the call option higher from the current price, which is OTM. And combining both is a wheel strategy, and you keep on repeating this. Yes, Deepak ji, I have answered the question in brief with the
Great, sir.
respective slide.
Yeah, the next question is from Mr. Sadaguru Rai, and he's asking if OTM converts ITM before expiry, what will happen?
See, if OTM becomes ITM before expiry, why you are worried, sir? The settlement price will happen only on the closing day of the expiry. In between, let it go as high as you get. Yes, from the your trading account perspective, if the margin is increased, you have to maintain the span margin to hold your positions. Beyond that, your if becomes ITM or even deep ITM, you are willing to, if you have done a cash secured puts, you are taking the delivery of the shares. There is nothing for you to worry. Let it go as low as it can go. You don't have to pay the difference of M to M, other than you have to maintain the span margin as per decided by the exchange. And if you have sold the covered call, let it close 10% higher. Now you have the delivery of the shares, sir. If it's going against you in a big way, you are already prepared that if it closes above this, I'll give delivery of in between. Let it be 5% higher from the current price. Doesn't matter. What matters is the day of expiry, where it closes. Have I answered your question, Mr. Rao?
Yeah, he's doing thumbs up, sir.
Yeah.
So we have next question, Amitabha Burman, and
Yeah.
he's saying put selection strike is important. If the price goes well below OTM, then how to tackle this?
Okay. So let me reframe the question. You're saying selection is important. Yes. Whether you are doing a cash secured puts or a covered calls, you are doing in OTM. Now OTM means the one strike price below or above the price in call and put. So know the personality of the stocks. Typically when we do is not to get the fat premium, it is get the additional income. So you can go for a 5% lower put option for the cash secured puts, or 5% higher call options for a covered calls. Now here the catch is that the decay in premium happens because of time value. So the time value is not lost. If I do a trade, if I take this on February expiry right tomorrow morning, fine. So the day the what we say the series starts are the best day to sell the OTM. So the OTM here which you are selling is not one strike or two strike below it. They are deep OTM. When I say deep OTM, the minimum benchmark you can keep is anywhere between 3 to 5% from the current price. If you sell 3% higher, the premium will be high, but the volatility will also be there. If you sell 5%, it can come down to 5%, but if it closes above 5 on the day of the expiry, since it's a net creditor, you keep the entire premium with you. Yes. Have I answered the question, Deepak ji?
Yes, sir, I think so.
Yeah.
The next question is from Mr. Aditya Jain. Yeah, Mitaba is giving a thumbs up, sir. So the
Okay.
question is from Mr. Aditya is after selling PE, if the stock price further lowers rupees 100, then it will be
Yes.
used. Then what to do?
Uh, you are right, sir. If let's say HDFC Bank is in front of you, I sold 880 puts. Now the stock is at 700. So that's the drawdown you are holding on your investment. Remember thing. See, there are two different words: investors and traders. For traders, it's a M2M loss. For investors, it's a drawdown. Whenever I'm doing an investment, I have to take certain amount of drawdown into my account. But that drawdown you have to take in, instead of buying at 916, see the positive side of it, you're buying at 880. Does that answer the question, Deepakji? See, if you see as M2M losses, please don't see at a M2M losses. After you buying at 880, let's say prices goes down to 800, and you might say I'm making 80 rupees loss. No, it's not a M2M loss. That's the drawdown, and every investment will have a drawdown. Yes, Deepakji, have I answered
Yeah,
that question?
I think so, sir.
Yeah.
The next question is from Mr. Anand, and he is
Okay.
asking with Reliance example, can you explain for one lot how much margin is required?
Again, the question of margin does not come, sir, in a whale strategy, because here margin will be only, let's say, 1.5 lakhs or 2 lakhs. But if it gets exercised, you have to take the delivery of the shares. If you start it with cash secured puts, so multiply the lot size by the price, and that's the fund you have to keep in handy. So Deepak ji, the question of margin does not come here, because once it gets exercised, you're not buying in futures, you are taking the delivery of the shares. And you take the delivery of the shares, multiply by the lot size into the price at which it got exercised. Have I answered the question, Deepak ji?
Yes,
Yes.
sir. Next question is from Mr. Devendra Kalra, and I think it is relevant to all. He said
Okay.
he missed the last week webinar, so can he get the recording?
Uh, you should watch the recordings, repeatedly watch
Yes,
the
yes.
recordings. The more you watch, the more the question will you have for the next webinar, which we are willing to answer and explain in great details. Yes.
No,
Deepak
no,
ji,
no.
are you
He's
waiting
asking
for
about the
that?
last webinar recording, sir. So I would like to answer this question. We have put the recording on our website. You can just go to stocko.in and there is a homepage and you will get uh, last week webinar recording there. Also on our YouTube channel. So can you show, sir, the
Yeah,
Stocko
I'm
website?
just doing that. So I've gone to Stocko website. Is it visible?
No, sir, not yet. It's still your PPT is here.
1 second. Oh, just give me a second to do that.
Okay.
Now is it visible?
Not yet, sir. Only your,
Yeah,
yeah, now you
it's
can,
okay.
yes, yes, yes.
It's visible now.
Go again, sir.
Yeah, I got it, sir. I have multiple screens, so I'm just bringing it here. So this is the
Yes.
Stocko website. Yes.
Just go down.
Yes. Right.
Little more, sir.
Yeah.
Yeah, here you are.
Yes.
So this is the webinar recording of our of last webinar. So you can get it here, Mr. Devendra.
So you can get it on the website. You can click on it, and it will take you to the concerned recording site. Yes.
Okay. So next question is from Mr. Bharat, and it is very long question, sir.
Yeah.
Should I read it? Are you okay?
Yeah, I'm ready.
So Mr. Bharat, he is saying first leg sell P approx 6 to 8% below the CMP, that is sell P current month till the strike price meets the closing price or CL below the strike price and keep that decay in premium. And in second leg, once delivery is done, sell C at least 9% above the CMP or near the resistance and keep the decay in premium till the monthly close is below the strike price. Is this correct?
Your interpretation is absolutely correct, sir.
Okay,
Yes, Deepak. Absolutely correct.
great. Next question is from Mr. Radhesham Sani. Sir, I
Mr.
buy stock of
Radheshyamji?
Radhesham, sir.
Okay.
Sir, I buy stock after put being at ITM and thereafter it also goes down.
Okay.
That's it.
No. Once again, Deepak, you can help me out with the question. एक बार sir आप repeat कर दो तो.
I think he's sharing his experience here.
Okay.
I buy stock after put being at ITM and thereafter it goes down.
Okay. So again, I go back to the earlier slide. As I said, this is not for very active traders. This is for investors. Right? So what do we say? Stocks you want to own for the long term. जो stock आपको long term में लेना उसमें ही काम करना है. Fundamentally strong, high liquid, and stocks with low volatility. Let's say HDFC Bank or a Reliance have a range on a monthly basis. We are not doing such strategies on volatile stocks which goes one-sided like Dixon Technologies or etc. Got it, sir? Mr. Radheshyamji?
Okay, I think we should move to the next one.
Yeah, so stock selection is the key. It's not a trading this thing strategy. It's a option strategy for investors. See, there are option strategy for traders. We'll do in later webinar. This specific is an option strategy for investors. So you have to approach this from that mindset. Go ahead, Deepak.
So the next question we have from Mr. Hitesh Sinha, and he's saying, when I have sold HDFC PE at 900, will I get the delivery automatically if it close at 860? Or do I need to do
Absolutely,
again?
sir. You will get delivery automatically. You have to pay the amount and the delivery comes, sir. That means the cash secured puts which you have done in terms of strategy has now been exercised and you have to take the delivery of the shares. You have to take delivery. Is it answered, Deepakji, the question?
Yeah, I think so, sir.
Yeah.
Just let me check. Yes, sir. Most of the questions are repeating.
Okay.
We have a question from Mohit, and he's asking about the data, from where he can get this data.
Uh, whose question is this?
Mohit.
Okay, data of what?
Mm, uh, Only this one, this much is mentioned here, sir. From where we can get this data?
Okay, this data HDFC Bank, what you are seeing right in front of you, I have gone to the Stocko InCred Money Trading View platform, change the time frame to monthly and taken the data from there. Do you want me to show it, Deepakji?
Stock performance data he's asking about. Stock performance
Yeah,
data, yes, sir.
that stock performance data, and I have taken it from the charts.
Okay. And
Do
it
you
will be
want me to show
month-wise?
it in? Yeah, it's month wise. It's better I show once. Okay.
Yeah,
So is
sure,
the
sir.
Stocko InCred Money platform visible to everybody?
Uh, Yeah, website is here, sir.
Yeah. So now I'll just log in. So let's say I went to Reliance. Okay. So I go to my Stocko InCred Money platform in the trading view part. This is Reliance. So I've added Reliance. Okay. I zoom the chart. I remove the volume. I go to monthly. So now what you have is a monthly candle. So if I keep on this candle, and if you look on the left top hand side, it has open, high, low, and close. So that's the open, high, low, and close for the monthly, and it is showing 10.1119%. So in the month of April 2025, the performance of Reliance was 10.19% up. So see the performance. You don't have to go to Google or anywhere. Everything is available to you. If you change the time frame to monthly for monthly performance, weekly for weekly performance, and quarterly chart for the quarterly performance on Stocko InCred Money Trading View platform itself. I think Deepakji, was it clear, sir?
I think so, sir. Let Mohiji reply.
If I go to quarterly, I'll get my weekly also, right? So you can get that performance over here by keeping on the relevant candle. Again, I do that. I want to see the monthly. Let's say this month till today, Reliance is down 12.09%. What it did in December, it was down 0.19%. You can just keep your cursor on the candle, and in the bracket, it is showing the performance. Everybody getting it?
Yes, sir.
Yes.
So should we move to the next question, sir?
Sure, sir.
Next question is from Mr. Bharat Nanavati,
Okay.
and he's asking, after taking the delivery, if stock continues to fall hard, how to safeguard it? Is it that call writing is helping?
Absolutely, sir. When you are after taking the delivery of the shares, you have a certain analysis of your own on that stock. You want to hold the stock for the long term, keep it in the long term portfolio, it's down. Start selling covered calls. So you are holding the delivery of the shares and you are selling the calls. So if the strike price which you are selling is prices are not closing below that, the entire premium you receive, so that is your income generation from your holding by doing covered calls. Yes, absolutely, sir. Keep on selling higher call options.
Okay. Next question is from Mr. Gopal Krishna,
Okay.
and he's asking how to deal when huge gap ups or gap downs happen.
Again, this is not a trading strategy, right? How does it matter if a huge gap up or gap down happens on a daily basis or a weekly basis? Either you are selling a put, which is a cash secured put. If you want to take a delivery at the lower levels, gap down will be helpful to you. You will get that. You will be able to buy the stock at the price where you have decided to buy. That's a benefit. And once you hold the stock, let it gap up or gap down, because you are holding the stock. If it gaps up, you are making capital appreciation, fine. And then your option which you are selling is a monthly. Wait till monthly expiry where it is closing. If it closes at OTM, that intraday or intra-week gap has no relevance for you in this strategy. You don't even so worry about it. Have I answered the question, Deepakji?
Yes, sir, very much. Yeah, there is a thumbs up from Mr. Gopal Krishna also.
Is thumbs up?
Yeah, yes, sir.
Oh, Thank you so much.
So another question is from Mr. Anand.
Okay.
Uh, at what price stock will be bought after exercise? Has there been any slippage during exercise, or simply it has been bought at mentioned strike price?
So the beauty part of this is at the exercise price it is bought, plus you had, let's say you sold a call option at 100 when the price was 120, so it closed at 90, and the sorry, put option which you have sold was 10 rupees, so 100 minus 10 is 90, so you bought at low for the lower price. Yes, you always buy at the strike price which you have sold the puts and minus the premium received, so it will become further lower.
Uh, Next question is regarding today's webinar recording and when it will be uploaded. So it will be uploaded very soon. We will try by tomorrow EOD. It will be there on website.
Okay, Deepak.
Sir, I think we have done with the questions.
Okay.
Yes, sir. So
So
can we conclude here, sir, or you would like to
yeah,
add something else?
yeah. Thanks all the participants. From the question which I was receiving, showed that your level of interest, your level of understanding, and your level of taking actionable strategy was very high. Because the question which came was respect to your payoff, what will happen if gap up, gap down, shows the high level of interaction is everybody was interested in the strategy. You are looking for something which was low risk, right? And you got something which you are looking for. Yes, Deepakji. And your all the traders' participation was fantastic, Deepakji. I've never ever seen such a participation in which I kept on taking questions one after the other, and all the questions were excellent questions, which means all the doubts which were coming. In fact, I was noting down the questions. I had also to do the calculation. The questions were showing the depth of the traders which you attended today's session. Yes, Deepakji. It was a great
Yes,
group, sir.
yes, sir, surely.
Webinar, you will get a survey. Make sure this survey is for you. It's to help us improve upon the webinar, whether it's content, the delivery, the technology, the format. So it's very important for you to take the survey. So you will get the survey immediately after this webinar. The survey will be there and the survey is for you. Remember that. The way you tell us to improve or what were your doubts, or how to take it forward for a better experience next time, the survey is for you. Make sure you do the survey. Thanks, Deepakji.
Yeah, any question related to this webinar or any topic suggestions will also be welcome.
Sure. So Deepakji has announced any questions regarding any topics which you'd like us to cover or regarding this topic, please mention it. As I said, this education series is for you. It's for you to learn, for you to grow.
Yes, sir. We can conclude now, sir.
Thanks, Deepakji, for
Thank
arranging
you.
such a wonderful session, and thanks all the participants. You are a great group of traders and investors today. Thanks, everybody. Have a nice day.